Hi, welcome to Coffee Break Accounting, hosted by me, Becky Brooksbank. So make sure if you haven't got one, you've grabbed a cup of tea, coffee, whichever is your preference, and you're settled in nicely for our jargon-free accounting session to help you better understand your business numbers and get to know your business better than you ever have done before. So if you haven't got a cup of tea in hand, press pause, go away, get one, come back and settle in for 10 to 15 minutes of this week's Coffee Break Accounting. So series 1, it was everything to do with the profit and loss account. So last week we brought you series 1, episode 1 on sales. If you haven't seen last week's episode, then head over to charworthassociates.com. That's Charworth, CHAWORTH associates.com, as per the spelling on the bottom of the screen, and you will be able to find under the workshops and events tab all of the Coffee Break accounting sessions, so you can click on them, click links and watch the videos. So today we're going to move on to series 1 episode 2, which is based on direct costs. So Last week we were looking at the sales, the exciting bit of the business, the cash in from your customers, the bits you really want to know about. And now we're going to keep moving down our profit and loss account and have a look, start looking at some deductions that you might incur as a business. Hopefully you all went away and did your takeaway task from last week, which was to analyse your sales. And hopefully you will have the start of a profit and loss account that looks a bit like this. So if you're new to us, you won't know who John Tapp is. So John Tapp is our case study plumber. He's totally fictitious, but he is a self-employed plumber and is currently looking at his accounts for the year ended the 5th of April 2019, so the tax year he runs in. And we looked last week at sales, discounts and refunds to give the total net sales that he's declaring per his accounts. And we're going to move on from this. So hopefully, if you've done your takeaway task, you will have a profit and loss account that might look a little bit like this that John's done. Okay, so today we're going to have a look at some direct costs. Okay, so I also like to consider direct costs in terms of cost of goods sold. It's an alternative name, just like we had sales revenue and turnover last week, but sometimes it better describes this group of costs, I think. So the direct costs, or the costs of goods sold, are the costs that you incur as a business in relation to the service or the product that you're providing to the customer. Okay, so it's expenses in which the business bears in delivering the sale to the customer. So if we go back to thinking about John, okay, he's helping us understand these concepts in his business. Kindly, thanks, John. So if we consider John fitting a bathroom for Mrs. Brown, okay, the service he's selling is that he's providing Mrs. Brown with a fully fitted bathroom. Great. It's going to be fully decorated and it's going to be in her 3-bedroomed house. So John may have charged Mrs. Brown £3,000. Apologies, any plumbers out there watching, if I've got my sales value totally sky high and you're thinking, oh, wish I had some of his line of work. Just made it up. Okay, so Mrs. Brown has paid John £3,000. However, John would have had to buy some products and incur some costs in order to do the job for Mrs. Brown. Have a quick think, and I'll take a pause here so you can catch up, on some items that John may have had to buy in order to specifically do Mrs. Brown's bathroom fitting. Okay, so which of these came to mind? So he's going to need a bathroom suite, okay? Bit standard and part of a bathroom fitting. He is going to need some tiles. He's going to need some paint. He might be glossing the skirting boards. He's going to need some tools to do this. So he's going to need some roller heads. He's going to need some paintbrushes. He might need some screws, some grout, some silicone glue, and so the list goes on, okay? When John pays for these items under cash accounting, come back to that again in a second. He will recognise the expenses at the point in which he pays for them. So remember, if you can't remember cash accounting from last week, go and find series 1, little note in there about what cash accounting means, okay? But cash accounting, we're going to assume John has paid, as soon as he pays for these expenses, they'll be recognised in his profit and loss account, okay? So rather than having them all lumped together, John might want to consider what these expenses look in his profit and loss account. So we're going to start helping him build this, okay? So we've built the sales, and now we're going to build the direct costs, or as they're otherwise known, costs of goods sold, okay? Now it is possible just to simply do this. Direct costs, they're coming out, so we always show them as negative, are £20,000. Okay, we could simply do that and just have the direct costs for John for a year of being £20,000. But what we have to think about is, well, it doesn't really tell us a huge amount, okay? Now, you can have as many cost headings as you want. There's no rule, okay? The financials are there for you to understand your business and how it runs and what it's doing. So you can have as many as you want, but the one thing I would always say is don't overcomplicate it, okay? Because it's more of a headache. So if you had 25 cost line and direct costs for every minuscule little thing that you buy, I can guarantee it would take you longer to figure out which heading to put it in than it would just to have some generic headings. Okay, so John's decided he's going to have some sensible headings. He's going to have materials which will cover everything from tiles through to the bathroom suite itself. He's also going to have consumables. So consumables are things like the paint and the grout and the silicone adhesive. So they're things that he might not use a whole tub on one job, he might carry some over to the next job, but they just get generally used up while he's doing the job. So screws, nails, anything like that are also good examples, okay? He might also have small tools. Now I'm going to stick with small tools here because I'm not going to get complicated in the world of tile cutters and everything, which may be a couple of £100 ago. We're just going to consider small tools. These are the disposable ones, so it'll be things like his paintbrush heads, his roller heads, screwdrivers, relatively small tools, anything that might get lost or just once use and finished with would go in here. And he's just going to keep these to relatively simple. So out of this £20,000, the most significant part for John is going to be his materials that he uses over the course of the year. He might then have £3,000 in consumables, and he might have £2,000 in small tools. So he's going to analyse them out, remember keeping his receipts, and we'll come back to that in a later session, to support the whole amount of his cost of goods sold here, which he knew to be £20,000. Okay, so his total direct costs for John for this year are going to be £20,000. Okay, so his sales, net sales that he invoiced out to his customers was £49,750, and his total direct costs are £20,000 that you can see here. Okay, so if you're a product-based business, your cost of goods sold headers might look slightly differently, but will follow the same principle. So instead of materials, you would have product. Okay, so if you were selling shoes, for example, your sales would be your sales out to your customers where they're buying your shoes, and your product would say shoes. Now, other things that you might have for your cost of goods sold if you're a product-based business are things like packaging, shipping costs, any modifications you do to your product before you sell it. So you might get it in, you might add a sticker, I don't know, you may add a little surprise in there for the recipient when they open the parcels to go that little bit above and beyond. Anything like these would fall into this category. Okay, so the way to think of your direct costs are in terms of the costs in order to deliver the level of service and sale that you want to do. Okay, so one other cost that might come into direct costs is labour. Now, labour is one that you have to think about a little bit, because it could come into overheads, which we're looking at in a later series, or it could come into direct costs. If John, for example, can't get a full bathroom suite up the stairs on his own, he wouldn't have had asked Mrs. Brown to help him, give him a lift. What he would have done is got somebody in on a Saturday morning to help him lift it up the stairs for him. So those costs would fall in to the direct costs here. Okay, so John might have labour costs in here, and he might have had £500 worth of labour costs, which would then give him still his £20,000 direct costs. Okay. Similarly, if you think of a sales team, okay, so if you hire a sales team, they are there to drive the sale of your product or service, and therefore you would want to attribute an amount of their labour to a direct cost. Okay. Now, the reason that we have to be careful with direct costs and what we put in there will become apparent in series 1, episode 3, when we start looking at gross profit and what this actually means for our business. So from what we're looking at here today, it's important that you understand your different headings of your direct costs that you might have, and also how they you can total them up to give you a total direct costs or a total cost of goods sold cost in your accounts. So your takeaway task for today, I want you to take a moment again and think about your business. So we've looked at John's, now it's time to bring it in and look at your business. What cost headings might you use for your business? And do you have too many, too few, or just enough? Okay. So your takeaway task for today is to go away, continue building your profit and loss account by adding your cost of goods sold direct cost categories and totaling your direct costs, i.e. what I'd like you to do is come back to having this section here completed, ready for next session. Okay, that's your task to take away home and have a go at this week. So thank you again for joining me for the weekly instalment of Coffee Break Accounting. If you haven't signed up and you'd like Coffee Break Accounting delivered direct to your inbox every Wednesday, then feel free to head over to Charworth Associates page, and you'll find a sign up button on the workshops and events under all the different Coffee Break Accounting. Alternatively, just follow me on LinkedIn, Becky Brooksbank, and I'll put it out there every Wednesday, or on Facebook through @Charworth Associates. Plenty of time to find out the different Coffee Break Accountings. So just a reminder, next week is going to be episode 3, which will be on the gross profit, understanding the difference between net sales that we've looked at and total direct costs. So thanks for joining me. Look forward to next week's session of Coffee Break Accounting.